Ah, okay, guys, welcome to the Jet Janix channel again, and we are continuing today the financial modeling three statements. Okay, in the previous video, we have constructed the balance sheet of ABC company, and today we are going to construct the income statements. So let's start constructing of the income statement, and after developing this income statement we are going to calculate some ratios like the dividend per share, earning per share, book value per share and cash flow per share. Okay, and after that we are going to calculate some ratios as well. So let's start with the data of 2018. Okay, and in 2018, let's say we have net sale of 3100. This is just the example we are having just to develop the income statement. Okay, guys, so we have in 2018 3100 of sales. The operating cost except depreciation, which means excluding depreciation, let's say we have $2,250. Okay, so this is the operating cost except depreciation. Now we are going to calculate the earning before interest, tax, depreciation and amortization. Okay, so how are we going to calculate it? As usual, just type the equal. Okay, and now sum it. Okay, no, I'm sorry guys, sorry guys, I'm not gonna sum it, but I'm going to uh, deduct or subtract the operating cost from the net sale. Okay, so I will type equal and then I will select the net sale, and after that minus, and now I am going to select the operating cost. Okay, and now just press enter. Okay, so the earning before interest and tax figure is $850. Okay, now let's assume that we have the depreciation cost of this year is 87 million. Okay, now just press enter to record the amortization, and let's assume there is no amortization of this company in 2018. So I'm going to calculate the overall figure for depreciation and amortization. So I will just type equal sum, because I'm going to calculate the depreciation and amortization, and both are the expenses, that's why I'm going to sum it. So it will be equivalent to 87 because we have amortization of $0. Okay, I just wrote here the 0. So the depreciation and amortization of this company is 87. And now let's calculate the earning before interest and tax. Okay, so how are we going to calculate this earning before interest and tax? Again, we are going to subtract the depreciation and amortization from the earning before interest, tax, depreciation and amortization amount. So I'm going to select the EBITDA, and I will subtract, let's say, this figure. Okay, the depreciation and amortization, this one. Okay, this one, not the only this one but this one, and I will just press enter. So the earning before interest and tax, or EBIT, we can say, is $763 for 2018. Now we are going to calculate the interest expense. Okay, and let's assume that the interest expense of this company is, let's assume, 60 million. Okay, and 60 million. So after this we are going to subtract the interest expense from the EBITDA, and we can do it by pressing the equal sign and then select this one and minus the interest expense. Okay, which is here. Okay, this is the interest expense, so I'm gonna select the cell I-74. Okay, and now I will press enter. So the earning before tax, or EBT, is $703. Okay, now let me scroll it down a bit to complete it, and now we have to calculate the tax expenses, okay? And the tax expense, if you remember, it is equivalent to the amount which is earning before tax, okay, this one. And as we know, the tax rate of this company is 35%, so we are going to calculate 35% on this value. So I'm going to calculate it like this, okay? Equal, and I will select the earning before interest and tax, which is here, and then I'm gonna calculate it or multiply it by the tax rate. And tax rate we have given in the very beginning before constructing the balance sheet. So we are having some, yes, it's here, this is the tax amount, okay? So I will select this one and press enter. So now I have the tax expense of $246, okay? This is the 35% of $703. Now we will calculate the net income before preferred dividend by subtracting the tax expense from the EBT, and we can calculate it by just type equal, and now select this one and minus tax, which is here, okay, is here this one, this tax, and just press enter, okay? So $457 is your net income before preferred dividend, okay? Now let's assume we are gonna pay the preferred dividend of $3 per share, okay? So net income available to common shareholder will be calculated as preferred dividend minus net income before preferred dividend, sorry, net income before preferred dividend minus preferred dividend, that will be equivalent to net income available to stockholders. So we can calculate it like this: select the net income before preferred dividend and subtract the this one, okay, the preferred dividend. So we are having 454 million of net income available to common shareholder. Now let's assume that we are going to pay 50 million in the common dividend, okay, 50 million to common dividend. And now if we subtract this 50 million from the net income available to common stockholder, the remaining amount will be credited to the retained earning. So we are going to subtract the common dividend from the net income by selecting the net income available to common stockholder minus this one, this common dividend, okay? So we have 404 of retained earning this year. So it was the data for the 2018, and now let me input the data for 2019 as well. I think we have learned the way how we are going to calculate these different values, these different results, and how we can construct the income statement. So for the 2019 I will just go a little bit faster, okay, and I will write, let's say, the sale amount 3150, okay, and the operating cost except depreciation is 2590, let's assume, okay. And here I am going to calculate equivalent to which is sales minus operating cost, and this is 560, okay, and the depreciation amount, let's say, is 98, okay, and the amortization is 0. So here I am going to calculate the depreciation and amortization by summing both the depreciation and amortization, which is equivalent to 98, because this company is having 0 amount of amortization, okay. And now I am going to calculate EBIT by selecting the earning before interest and tax and minus the depreciation and amortization. So it is $462 okay, and let's assume the interest expense for 2019 is 83 million. So here I am going to calculate the earning before taxes, which is equivalent to earning before interest and tax minus interest expense, and the earning before tax is equivalent to $379, okay, and the tax rate again I am going to calculate it by selecting the earning before tax multiply by the tax rate, which is somewhere here, okay, is here, yes, is this one, is 35%. So I will select this 35%, press enter, and now we have the tax expense of 132.7 million. And I'm going to calculate now the net income before preferred dividend by selecting this earning before tax minus this tax expense, and I will press enter. So $246.4, this is the net income before preferred dividend. And let's assume that this year again we are going to pay the preferred dividend of $3. So the net income available to common stockholder can be calculated by subtracting the preferred dividend from the net income before preferred dividend. So select this one and subtract this one, okay, the preferred dividend, and now we have $243.4 million in net income available to common stockholder, okay. Now let's assume that this year we are going to pay the 55 million in common dividends, and the addition to retained earning will be, select this one, net income available to common stockholder, and subtract the preferred dividend, okay, and so 188.4 is the addition to retained earning of this company. I think we got it, okay. How are we going to calculate going to develop the net income statement of a company? So now as we have all these figures, all these data, we are going to calculate the three things, okay, not three, okay, but four: the earning per share, okay, dividend per share, book value per share, and cash flow per share. Because we have the data ready and available to us, we can calculate it very easily. So in here, okay, for the 2018, here we will have the 2018 data. Let me write the 2018. Oh, sorry, it's not a percentage but year. Oh, wait guys, this is the year. Just write the number, I think it will work. No. Anyway, wait, 2018, and here we have 2019, okay, and again this is not the percentage, but it will be a number or year or date, or let's say no, let me anyway I will make it number, and I will remove this, okay. So wait, 2019, I think it's okay now, yes. So here I am going to calculate the earning per share, and as we know, I have given everything here. You can see it, dividend per share, dividend per share divided by the share outstanding, okay. As we have the dividend common dividend amount here somewhere here, yes, it's okay, it's here for 2018, and here it is for the 2019. Just we have to divide this figure by the share outstanding of in 2018 of this company, and this is for the dividend per share. And for the earning per share, we are going to divide the net income divided by the outstanding shares. For the book value, we are going to calculate it by total common equity divided by the share outstanding, and the cash flow per share we can calculate it by net income plus depreciation divided by the outstanding shares, okay. So first of all, I am going to calculate the earning per share for 2018. So I will select the earning per share, which is here. Sorry, no, I will select the net income available to common stockholder, and I will divide this by the outstanding shares. And the outstanding shares, as I have explained in my previous video, is some, yes, it's here, the outstanding share in million, that is 55. Okay, so select this one and press enter. Okay, so the earning per share is 8.25 in 2018. And if you want to calculate the dividend per share, so select the dividend, which is here, common dividend, and divide it by the outstanding shares. Okay, and the outstanding shares, again, it's here for 2018. Press enter. So it is earning per share, sorry, dividend per share is 0.91 per share. Okay, and if we want to calculate the book value per share, we are going to calculate the total equity, which we can find in the balance sheet. So we have to go in the balance sheet, and the total common equity is here for 2018, and we will divide it. You can see it here, the formula. Okay, so we will divide it by the outstanding share, and the outstanding share we have it here. Okay, so select this one and press enter. So the book value per share is 15 now, and if you can see in 2018-19 it was somewhere about 25 or 23, but we have somewhere here in our data set, let me find it somewhere. Yes, in 2018, you see now the stock price, as we had assumed it that it is at the beginning of 2018 it was 29. Okay, and now at the end of the 2018, if you see, the share price is, the book value of this share is 15.55. Okay, and if you want to calculate the cash flow per share, so we are going to add net income plus depreciation and then divide it by the outstanding share. So I am going to select the net income for 2018, and I will plus the depreciation. The depreciation is somewhere, yes, it's here, this one, and I am going to divide this value by the outstanding shares. Okay, I will listen, you can just see here that I am summing up the net income and depreciation, and I will divide this whole amount by the outstanding shares. Okay, and the outstanding shares are somewhere here, 55 million. Okay, and now I'm going to press enter. So the cash flow per share is 9.84. okay, for 2018. And for 2019, if you want to calculate the same ratios, just select the earning per share, and earning means the net income. Okay, for 2019, and divide it by the shares outstanding in 2019. It's somewhere here. Okay, wait, yes, here is again 55. So I'm gonna, it is the earning per share in 2019 is 4.42, and dividend per share is, select the dividend, which is here, yes, this one, dividend, common dividend, and divided by the shares outstanding. Okay, again the same figure. Here I would like to say something about this 55. Why I am scrolling it up every time, and I just click on here rather than just typing the 55 here. It is just because I want because we are doing the financial modeling, and I want all the statements to be interconnected in the formula, so that if we change only one figure, it will change all the remaining data and result. That's why I'm not just typing the 55 here, but I'm scrolling it up and selecting the cell where the data is available. It is the simple logic why I am doing so. Okay, so the book value per share, I'm going to select the total common equity, which is in the balance sheet, and it's here. Okay, and I will divide it by the outstanding shares, okay, and it's here, and press enter. So the book value per share in 2019 is $17, and if you want to calculate the cash flow per share, I'm going to take the net income and add the depreciation with it. Depreciation of 2019 is here, yes, and then I'm going to divide it by the outstanding shares, okay, and the outstanding shares again is 55 million, but I'm not typing it, but I will select it from here and press enter, okay. So you see the cash flow per share is $6.21 in 2019, okay. Now if you see why and why we constructed all these things and how it can help us, if you see this figure, these ratios, okay, if you change these ratios, we can have something like, for example, if I change the dividend from 55 to 60, you can see everything will change here, okay. Some change you will that will happen here in the let's say dividend per share amount. You see this one, it will change automatically, you see it changed. But if you change this one, this 50, let's say make it 78, now this one will change, okay. I will press enter, now you can notice it will change automatically, you see. So these are the different things, and you can make your decision very easy, and you can see if you make it automatic and interlink all the data, all the ratios, all the formulas, and then if you change one figure, it will change all the resulting values or all the resulting ratios or the analysis. That's why the financial modeling is very helpful in your decision making, and it assists your decision making. Now I hope it helps. I hope you got it, and it helped you a lot, and hope you will construct it. If you need any help in this kind of financial modeling, just write down in the comments and I will provide with further assistance. Now if you like our videos, please like, share and subscribe to our channel. Thank you guys, thank you. See you in next video. Bye bye.